Hey traders, this is Ron Haight. Hope you guys are doing fantastic. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. We'll kick off here with the Dow and how the chart looks, which we were down about 1.23, exactly 1.23%, $3. We cannot get over the 200-day SMA in purple, which is an institutional moving average. That is the big one. The second biggest is the 50-day. The 50-day in orange is also a good one for a litmus test too, but it's also where are they positioned on the chart. We got above the 50, but the 200 is right there. We close above the 200, then 260 on the DIA becomes the target, and then the old highs. We've come a long way considering we were in December, but we are still below the 200, so there's still some caution. We get above it, there would be, for example, less caution because the bulls are now getting above one more hurdle, one more key resistance level. That's how I look at it. Now, if we take a look at the SPY, the SPY has not reached its 200-day moving average yet. It was down 1.35%. There was no technical damage done with today's down move. It was simply a down move. And if we look at the Qs, QQQ, this was down right on the money, 2%. It is still above its 50-day in orange. If I zoom in a little closer, you can see that. And it's still above the 20-day EMA in red. Across the board, what I would still consider keeping an eye on would be the 20-day EMA in red. Because of how the 50-day is positioned right now, we're above it. What the 20-day EMA in red is close enough. So I'm going to take the lower of the two. That's why I'm picking it. So everything in the video I said yesterday still applies for today. Yes, we lost 2% in the Qs, about 1.25% in the others. There's no damage done yet. Yeah, we're below the 5-day in blue, but it's only the 5-day. Now, there was a couple questions posted in YouTube talking about, I'm going to generalize this. Where's the market going? What do I think? There's the debt issue. And how do we change from being bullish to bearish? So what I like to do in these videos is just give you a technical perspective. I can't predict where anything is going to go. I wish I really could. I wish I could, but I can't. So I just look at what the money is doing. If you guys just gave me two things, you said, hey, Ron, pick two things that you can trade with. Those two things would be volume, which you see at the bottom of my screen, and the next thing would be candlesticks. Only two things I ever had to trade with, those are it, period. Nothing even comes close. We could bring in Fibonacci's, which I do think are great. Ichimoku, the cloud, not the rash. We could bring in a pitchfork. We could bring in what I have on my screen, the green lines, which are the 2 standard deviation John Bollinger Bands. There's a lot of fantastic indicators out there. But at some point, you have paralysis analysis. So if I had to pick two, volume and candles, period. Now, I do use moving averages. Those are the squiggly lines on the screen. And I think they can help, but there's no perfect answer, whether you're an Elliott wave, an Ichimoku, or somebody else, OHLC bars, whatever it might be. Nothing's perfect. So if I put out a subject line saying, stocks get hammered, looks like we're going here, it's purely technical because if support levels are lost, for example, let's use the Qs. In fact, let me just get rid of that little box there. We don't need that anymore. And I'm going to keep the channel in here for now. I'm just curious. We got above it. Now we're back testing it. Are we going to break it or are we going to bounce off of it? If we bounce higher, that's actually pretty bullish. But let's get back to the point. So this is where we sit now. What would it take for the chart to be bearish? And I go from, hey, it looks like the bulls are winning. Well, if we get below the 20-day EMA, that's a key moving average. For the short term, it's actually one month worth of data. If we get below there, that's when we come down here, and then we come down here to lows. As long as we stay above these, we keep pushing higher, and that's going to be my outlook. At some point, you guys could probably do these videos. You don't even need me because it's all technical in nature. Where is the money being put down? There are some folks, some people on TV, that have even said, oh, technical analysis is not worth anything. Now they have their TV shows and it's funny. Now they talk about technical analysis. So I think everybody at some point comes around to it. Candlesticks have been around for centuries. It's not like it was just introduced yesterday and it's some kind of secretive something, But it's just where were the battles, conducted. There was a battle here, the bulls lost. There was a battle here, the bulls lost. Here, the bears lost and the bulls pushed up. So we're looking for these swing points. If we start pushing lower here, then this previous high becomes resistance. So we just take it as we see it. Now, my longer term feeling on the market is we're going to go way higher. Short term, I'm not convinced we're not going down one more time. Because like I said, what sent us low in December didn't pass the smell test. The rally didn't pass the smell test based on what we previously sold off on. There was no change. Now today there's more commentary. There's no deal for the government shutdown. There's no deal for the border wall, etc. And we all of a sudden we just come down after a 3-day weekend. You know, the market's going to do what it wants to do, and you just take it as it comes. Even though I think the market could go, and I can't give you a number, I just think way higher. What does way higher mean? I don't know, 10, 20% higher maybe, who knows, before, I don't want to say the end of time has come for the market, but there's going to be one heck of a sell-off because there's a lot of money in the stock market, in my opinion, that doesn't belong there. It's all chasing a return. So the one question was, you know, what do I see about the debt problem? That problem's been there. It was under previous presidents. It's under this president. This president just happened to say, you know, I'm not going to be here for it. And he's probably right, but neither was the last president and the one before him. This isn't just something that happened overnight. It's going to come to a head. And unfortunately, you know, whoever president you may or may not like is going to be in there, left, right, center, doesn't matter. It's going to hit somebody at some point, and it's going to be their problem. And you could say they didn't even deserve it, right? Whoever that's going to be down the line, because all of the Congress and all of the presidents, they're perpetuating this debt problem. But just because the debt one day is going to become a massive issue doesn't mean the market can't go higher in the near term. Doesn't mean it can't go lower in the near term. So what I like to do is just put my fingers in my ears, hum to your favorite tune, ignore all the talking heads, and just say, what do I see on the chart? You know, where are the bulls coming in? There's volume, big volume coming in. We start going higher. We start rolling over. Big volume comes back in, like there, and then we start going lower. And that's how I prefer to look at the market. At some point, I think we'll find a bottom and then we rally. And if we don't, that's okay. Remember, we can have bullish or bearish positions open as traders, and we can hedge. So it's not like we're just trading, you know, like in the wild, wild west of going all in. All in might be fine for poker, but not for the stock market. So it's a long way to answer those questions, but I do appreciate them. And I hope this gives you some context in how I do the videos. I'm just trying to give you an update of what I see on the charts. And if there's changes, I try to pass those along to you, and hopefully you find them helpful. And it's always from an educational perspective, so it's never advice to buy or sell. All right, a couple other stocks here really quick. Let's take a look at oil via ticker symbol USO, which is not completely oil. I see an inverted head and shoulders, left shoulder here, heads down here, right shoulder not as defined, doesn't need to be. And I said we got popped above it here. We're still hanging in there. Keep an eye on that 1150 area above 1150. That opens up, you know, another almost $2 push, which is pretty big. So I'm still watching USO here. Here's Altria. These guys got downgraded reportedly from JP Morgan. Stock got whacked down almost 7%. I would have to take you back to a 5-year chart and say, holy moly, just over 40 bucks, 41, 42 bucks is the target. Still about 5% lower. If that one fails, man, look out. Then we're talking about maybe 35. And that's huge for a stock like this. BJ, which is BJ Wholesale, if I go to a 1-year daily, you can see back on the 16th, which would have been Thursday or Wednesday, we broke above these previous highs. Today we just closed above that high. The next upside target, I mean, there's a little bit of resistance at 29. That's almost 4 points higher. And then you're talking 31. Well, that's 20% potentially higher. It's only technical. Again, not saying it's going to get there, but those would be the upside targets. This was the last major bull-bear battle that sent the stock pushing lower for a while. So if we start getting back up into this area, you can think that, all right, maybe some of those people that bought at 30, then it was at 20, they might want to sell just to get some capital back. And that's what usually puts a top in stocks or a roof in stocks. This is not the most heavily traded stock, only 1.2 million shares today. But it's trending pretty nicely right now, very calmly higher. And then we looked at NOG last night, and this is Northern Oil and Gas. The 200-day in purple, I said watch that one, and then watch this little high here. We lost 5+% today. It never did get above the 200-day. So this is still basically a dead duck until we get back above the 200-day and even maybe above here. And at that point, we start targeting maybe 375-ish and then back to the previous highs as upside targets. So that's it. I hope you find these videos helpful. I wish you guys all the best. I'll be back with you again tomorrow. Take care.